This week, the Fed is likely to cut interest rates in 2024. How could this push down home values? More in a moment.
Building relationships is the way Mutual of Omaha has grown into one of the leading financial services companies in the world. Our reverse mortgage wholesale division is proud to carry on this 100-plus year tradition. To your borrowers, a reverse mortgage is more than a transaction. It's a promise of a better, more stress-free life. Our goal is to provide you, our valued client, with the best service and support possible so you can focus on helping your borrowers achieve the retirement of their dreams.
On this show, we've often discussed the impact of interest rates on home values and reverse mortgage lending. So it begs the question, would lower interest rates in 2024 spur another boom in home values? Not necessarily. The Federal Reserve is in fact well aware that real estate is a major driver of our overall economy, and they do see the logjam of housing inventory and record low home sales. It's a question of when mortgage rates will start to drop meaningfully, not if they will, says Melissa Cohn, Vice President of William Ravis Mortgage. Now, just for a moment before we continue, could I ask you to press the like button and subscribe to our channel here on YouTube? It greatly helps us. It seems counterintuitive to say that lower mortgage rates could push down home values to more affordable prices. After all, the Fed's near-zero Fed funds rate and home mortgage rates that were as low as 3% fueled a historic boom in home prices. But let's look back first at when the Fed has decided to drop interest rates. In the early 1980s, the price of oil surged in the wake of the Iranian Revolution, and the Fed's recent tight monetary policy in the previous years led to a recession. Another recession followed from July 1990 to March of 1991, and the Fed responded with another series of interest rate cuts. A brief recession followed the dot-com bubble and the September 9/11 attacks, and the Fed once again decided to cut interest rates. Then came the great financial crisis of 2008. As unemployment surged and the economy teetered on collapse, the central bank once again cut the Fed funds rate to nearly zero, where in fact it remained for a record 7 years. Most recently, the COVID-19 pandemic triggered a very short recession from February 2020 to April of that year, and once again rates were slashed to near zero. But seeing home values rising to astronomical levels and inflation surging, the Fed reversed course and increased interest rates at a historic pace. So what if the Fed reverses course once again and slashes rates in 2024? A recession in 2024 would likely weaken housing demand beyond its current low level, and if it were significant enough, it could stress existing homeowners' finances to prompt some to sell, reversing the supply-demand balance that we've seen in the last few years, said Daniel Hale, Realtor.com's chief economist. This does make sense since the National Association of Realtors reports that nearly 82% of would-be homebuyers feel the golden handcuffs of their existing low-rate mortgage. Now, what is the magic interest rate that could clear the logjam of housing inventory of reluctant sellers and discouraged potential buyers? 5.5%, reports NAR. And with affordability being the biggest barrier, 71% of potential homebuyers today report that they will not accept a 30-year mortgage rate that's above 5.5%. They may get their wish if UBS's projection comes to pass. The European Bank predicts that the Fed will slash the Fed funds rate by 2.75% in 2024, ultimately down to 1.25% by the first half of 2025. Now, that stands in stark contrast to the majority of economists who expect only a 75 basis point reduction in the Fed funds rate in 2024. The good news is that both the 30-year fixed-rate mortgage and the 10-year constant maturity Treasury rate, which impacts the home equity conversion mortgage's expected rate, have dropped significantly in recent months. Today, housing experts and economists are closely monitoring mortgage foreclosures and delinquency rates, a trend that would certainly increase if we do in fact enter into a recession. What remains to be seen is if a dramatic cut of interest rates in 2024 would increase housing inventory and consequently lower prices, or instead if it would spur another boom in home values. What is certain is that the housing market is in a period of volatility. Where do you see home values headed if interest rates are cut significantly in 2024? You can let us know your thoughts in the comment section below. Also, if you would share this video on LinkedIn, we appreciate each of you that do that each and every week. And don't forget, we have a YouTube channel, as we mentioned earlier, and if you hit the notification bell after you subscribe, you'll never miss an upcoming episode. We bring you the most recent reverse mortgage news that we curate in our weekly podcast, Heckham World Weekly, which is now in an audio and video version. You can find it here at Heckham World, or you can listen on Apple Music and Spotify or Podbean. Thanks again for joining us, and be sure to return next week for more reverse mortgage news, commentary, and analysis you'll only find here at Heckham World. Have a great week.